Hey everyone, welcome back to the new year. It's 2025. This is going to be your first weekly market outlook for January 2025. So let's get this started with what we had the previous week. I think it was a pretty volatile week. It's not a lot in terms of what the fundamentals are, but I think we saw a lot of volatility in terms of the resentiments in the market and how strong the US dollar was. ISM manufacturing PMI obviously printed a lot higher, very close to that 50 mark now. It's 49.3. That was a lot higher than what the market was expecting at 48.4. So I think that was one of the bigger drivers in terms of how strong that US dollar was. And also in terms of the anticipation that the Fed is likely going to be a little bit more on the hawkish side. And obviously, that's talk about the uncertainty in terms of the new fiscal policy that Trump is going to bring on board. That could drive inflation up. So I think market was a little bit jittery in terms of how inflation could actually be pushed up by all the tariffs imposed, as well as all the stimulus that's likely going to be given by Trump with the new government there. All right, so this week, jam-packed week. We're going to be starting the week with inflation numbers from the Eurozone. Obviously, main focus is definitely the headline inflation, flash headline inflation from the Eurozone, which is expected to increase from 2.2 to 2.4%, and then we are going to be followed through with the ISM services PMI from the US. That's all going to be on Tuesday, and then we have the JOLTS job opening numbers. This is going to be the week where we are going to be looking at the NFE numbers. So it is going to be a pretty hectic week for the start of 2025. And I want to bring your attention to one fundamental news. This is a little bit more qualitative than anything else, but the FOMC meeting minutes, which is going to be released on Wednesday, this is actually going to be really crucial. I think this is actually going to be a market moving event because we will be able to find out a little bit more in depth in terms of how the FOMC members were thinking about, the interest rate decisions that they made, and in terms of whether or not they're going to be cutting more in 2025. Are they going to be hesitant in terms of cutting interest rates, or, they're okay with interest rates coming off a little bit lower? I think we're going to get a lot more details from the FOMC meeting minutes. So just make sure you take a note on when this is actually going to be released. This is going to be Wednesday, a little bit later on Wednesday. It is about 2 p.m. New York time on Wednesday in the US there. All right, on Friday, obviously the unemployment rate and the NFP numbers, this is going to be our main focus. Take a look at the unemployment rate first. Expected to remain stable at 4.2, or it might actually increase a little bit to 4.3%, but consensus points to 4.2%. The NFE numbers in terms of gain, we're currently looking at numbers between 150,000 to about 200,000. I think that is still going to be a huge gain for the market, but if there's a miss, if the numbers printed lower below 150,000, then yeah, I think market would actually start rethinking in terms of their rate cut prices that has been done in December. It could actually unwind a lot of the stuff there post FOMC interest rate decision last month. So definitely something to keep an eye out for. And obviously this is a lot of volatility. We're expecting a lot of volatility with a lot of the volumes coming back from the holidays, and then all the key data that's actually going to be released this week as well. And over the weekend, obviously we are going to get our Chinese inflation data. That's going to be on Sunday. All right, let's just jump into the technicals. First things first, take a look at the Aussie USD. Broken through a lot of key levels here. We lost 63 cents, and can we say that we lose 62 cents at this point in time? I think 62 cents is still acting as a support for the Aussie USD. You can see the trend line there. It's still there in terms of the resistance trend line. Has been capping the market, and that's going to be our projected resistance, and that caps off at about 63 cents this week. So any recovery on the Aussie USD is likely going to be capped off at 63 cents. I know we're expecting a lot of volatility this week, because if you take a look at the pivot levels there, it actually ranges from 61 cents all the way up to 63 cents. And that's huge. We're talking about 1 cent up, 1 cent down. We're talking about 2 cents range on the Aussie USD. This is actually pretty significant. For now, immediate support is likely going to be at 62 cents at time of recording. That's where price is. The pivot is also located at 62 cents. So it is very crucial in terms of how we start the week this week. But yeah, in terms of how far it can go down, we're likely going to be finding a lot of strong support at support 1 and support 2. That's basically between 61.75 to 61.50. Resistance wise, really focusing a lot more on 62.80 to 63 cents on the Aussie USD here. Right, next is the Euro USD. Huge pressure to the downside. I think this one here, it's super weak at this point in time. Price has not touched 1.02 yet. That's going to be our immediate support for the Euro USD. Immediate resistance right now, if you can take a look at where the weekly pivot is located, very close to 1.0350. That's going to be our immediate resistance. 1.0350, you have to keep in mind, that was actually the support that we saw in November. That was also the support that we saw in December. We have broken below that support level last week, and this is likely going to be a week where we are likely going to test 1.0350. If it functions as a resistance, then yeah, I think we are going to be looking at more continued selling around 1.0350, and we could see traders push price down to 1.02 on the Euro USD here. It really depends on the inflation data as well, but from a technical perspective, definitely keeping an eye out 1.0350. If price fails to go back up above 1.0350, then expect more selling to happen. We could see more push towards that 1.02 level on the Euro USD. Now, Pound USD, we are at a very critical level. Obviously, we lost that 1.25 level there, and you can see where price just immediately go through. It actually went straight to the April-May support level on the Pound USD, which is at 1.2350 to 1.23. Now, where this level is coinciding, the support one is actually at 1.23. Now, the range that you see here on the support one and the resistance one on the weekly pivots here, the pivots are huge, right? So we're expecting huge volatility, especially on the Pound USD. So price right now, very close to the support level, 1.2350. We might see a little bit of buying here around this level here. We might see continued support. Once price break above the weekly pivot at 1.2458, 1.2460, then yeah, we might see the market retest the previous resistance around 1.2550. That's where the resistance one is located. But the distance between the two, R1 and support one, it's close to about 300 pips. So just look at that range between support one and resistance one. That's 300 pips. If you take a look at the range between support 2 and resistance 2, that is about 500 pips. Okay, so we are expecting huge volatility in the market, especially this week with the Pound USD as well. But yeah, any recovery above the pivot level, then we're likely going to be retesting resistance 1 around 1.2550, which was also the previous support area there on the Pound USD. Breaking above that also breaks above the resistance trend line. So a lot of traders are going to be focusing on this level here because any break above 1.2550, I think we might actually see continued buying on the Pound USD. But if it fails there, then I think a lot of sellers could actually come in as and try to push price back down to 1.2350 and 1.223. But yeah, on the worst extreme case in terms of range, we could anticipate a 500 pip range on the Pound USD. So be a little bit more careful with the market this week. All right, lastly, we have the dollar Japanese yen. And with the dollar Japanese yen, we took a little bit of a pause here. I think the market is kind of consolidating a little bit. In terms of what the consolidation looks like, it does look like an ascending triangle on the dollar Japanese yen. In terms of target resistance, target level, it's still going to be 159. Not a lot have changed from last week. That's where the R2 is located as well. That's where the 127.2% Fibonacci extension is going to be. I think we could see price pushing towards 159. But yeah, 159 to 160. Really want to focus on this level because any failures at 150 and 160, we could see a lot of profit taking happening. We might see a little bit of carry trade unwinding happening around this level as well. So just keep that in mind. Don't be too aggressive on the dollar Japanese yen. Take it as on the day-by-day scenario in terms of where the support and resistance is. But yeah, estimating where this could go for the dollar Japanese yen, I think we could still grind towards that 159 level. Support level on this one here, we're going to be looking at 156 on the dollar Japanese yen. As long as it stays above 156, I think we could see that grind towards 159. By any break below 156, then we could actually see that pullback towards support 2 and support 3. That's basically around 155 to 154 on the dollar Japanese yen. All right, so with that, good luck to your trades. And again, we are expecting huge volatility as volume starts coming back into the market. Everyone starts coming back from the holidays. A lot of huge impact fundamentals here this week. So just be on the lookout, be a little bit more careful. Expect a lot of volatility this week in the market. All right.